First of all, I'd like to welcome everyone to our manager showcase this afternoon featuring Andrew Martin from ARCUS Capital. It's a group that we've been doing real estate investments with for about 5 years now and have really enjoyed the relationship, and I know that many of you here have invested with them as well and are anxious to hear what Andrew has to say.
Thank you very much, Scott. Well, I sure appreciate the time. A few things that I want to touch on really quickly. ARCUS has a lot of real estate experience, not just on the commercial side, but also on the residential side. We've developed over 5 million square feet of commercial property, and we've also zoned and platted and engineered over 3,700 residential lots. Most of the time we have not developed them and completed them. Rather, we sell them off to developers so that they can develop them and then sell to national or home builders. The managers and employees of ARCUS have a reputation for honor, integrity, and unwavering commitment to ARCUS investors. I don't think real estate is rocket science. We follow economic principles. We answer questions honestly. We deliver good and bad news to clients. Don't hide anything. And I think that's why we're still in business today. I think what ARCUS brings to the table, like I said, real estate is not rocket science. There are a few real estate principles that you need to follow, and if so, you've really strengthened your potential investment. But what makes us a little unique from many is we are able to diversify a little more, maneuver, anticipate the market slightly more, not perfectly, and make adjustments. About 18 months ago, or 24 months even, we saw that even what we had recognized as a bubble that was about to burst, we saw that it was so much greater than we ever could have imagined. And so we started establishing relationships with regional and national banks, and knowing that at some point they were going to start liquidating assets at much greater losses than anyone anticipated. But essentially, ARCUS, our four best sellers right now are JP Morgan Chase, Bank of America, Capital Source, which is out of Chevy Chase, Maryland, and Wells Fargo. And also, actually, we've purchased 2 properties from the FDIC recently. We are also approved with the FDIC when they brought out the big $500 million chunks of portfolios, essentially saying that anyone who brought in some money, they'd lend them the rest at no return. We got approved for that. We haven't been able to take advantage of it yet. I don't think we're big enough to do so, but we are approved and still always underwriting those opportunities. What we have found in buying notes from banks is that typically a lot of people out there believe that if they deal with the bank regional president, that they can get better discounts because they're dealing with the decision maker. We've actually found that the bigger the bank, the bigger the discount, and a lot easier with which to work. And there are a few reasons for that. First, let me digress a little bit. There are a few reasons why banks sell notes. The first is obvious. They're underwater and they don't want it on their books. No bank wants property, whether it be cash flow or land on their books. That's not their business. And so they want their cash back so they can put it back into the market and create gains and essentially move on. The second is that they have written down these notes quite a bit, these assets. If you guys recall, in the start of 2009, Wells Fargo announced a $3 billion gain for that quarter. Does anyone remember that? And everyone was up in arms, and how could Wells Fargo make $3 billion that year, and it's fluff. And what they meant by saying it was fluff was what they really did was they took such huge losses in 2008 that when they sold, just on their books, that when they actually sold the assets or the notes, even though they might have been selling them for 50% of what their loan amount was, they were still booking profits. Most of you CPAs can describe that much more eloquently than I can. But it's very interesting dealing with a bank where we feel like we're giving them an absolute haircut and they're still going to book a profit, and that's one of the reasons why they're eager to sell the note. Just to give you a little example of what we're doing, this was a asset. It was a note on a building in Indianapolis, 440,000 square feet. It was right on the Indianapolis runway, and the unpaid principal balance was $15 million. At the time, the building was appraised for $18.5 million when they made the loan. We bought the note for $8.1 million. We immediately, it was already in the foreclosure process, so we continued on with it. We immediately started working with a buyer. Before we bought the note, felt like FedEx would be our best buyer because they own so many other buildings next to it. But we ended up selling it to Niagara Niagara Water Company out of LA for $11.4 million. Of course, it was contingent upon foreclosure because we actually didn't own the asset yet. So the contract read, within 3 days after foreclosure, they'll pay cash. The building was worth more than $11.4 million, but the 128-day length of investment was attractive. Cash buyer, we swooped in and quickly made some money and moved on.
And for those of you who are invested in ARCUS Equity One, this is the first property that sold in the ARCUS Equity One fund?
Correct. Mm-hmm. In addition to the spread, the property cash flowed at about $660,000 annual, so we had about $300,000 or maybe $250,000 of income while we were waiting the 128 days. Guarantee Bank. This is another building that current Cornerstone investors are in. This is a building in Fresno, California. We purchased the note for $12.75 million from Capital Source. It is cash flowing very well right now. The reason we are attracted to this is it's government tenants. So it's the INS, Department of Defense, and IRS, and it's 100% leased. We went in and we actually have, the IRS has already extended another 10 years, and the INS doesn't expire till 2014, but are currently negotiating to extend them another 10. This property is a fantastic asset in this market because it provides quite stable cash flow. I won't say perfectly stable because that's not possible, but it provides a cash flow from a tenant stronger than most tenants. I have 2 offers on the table on that are unsolicited, one at 18.5 and one at 19.25, and we're trying to decide what to do with that property. So a nice spread, and it's cash flowing while we're waiting also. We just foreclosed on that July 7th.